Hello and welcome to today's edition of Daily Trader. I'm Alex Coffey. It is Monday, October 21st. Now, there's just over 90 minutes left in today's trading session, but it's been an interesting start to the week. Now, kicked off the trading day with a little bit of market weakness. Now, that still exists, but the losses have been paired. Stocks specifically, one of the most important names to the markets, NVIDIA making a new all-time high, and we're not going to venture too far beyond. We're going to stay in semiconductor world, and we're going to look at a couple names that are slated for earnings tomorrow afternoon. Tomorrow being, of course, Tuesday. We're looking at Seagate Technology, the memory and storage computer hardware company, alongside Texas Instruments, which, of course, a little bit more industrial focused, semiconductors, as well as those calculators we all remember so well from the high school math classes back in the day. Now, let's start things here with Seagate Technology. Again, a more memory and storage-centric computer hardware company, but one that's been in a comfortable uptrend for much of 2024. You look at the performance going back over the last 6 months, it's up something like 30%. You look at the last 12 months, up something near 70%. Recently, making a 52-week high around 115, although it is slightly lower than that in real time, trading around 112. One thing that really stuck out to me, though, when taking a look at the technical setup and the chart, was that the 21-day exponential moving average, which is basically a 1-month exponential moving average, which currently sits around 109, had been a very, very clear level of support, a level that had been tested a few times in the recent past, and also one that had held. And so using that, keeping that in mind going into the earnings event, we're looking at a example trade in Seagate, of course, stock ticker STX, expiring this week, centered around this earnings event, with the idea that that 109 level may hold. Now, like many support levels, you maybe want to give it a little bit of cushion. Some would like to do that. In this case, we've done just that. This Friday's 108, 106 put vertical. Another thing you'll notice too is collecting 60 cents for that credit on the $2 wide spread. Now, a loose guideline that sometimes we'll talk about is somewhere between, let's say, a quarter the width of the strike. So in this case, that would be around 50 cents to around a third, which would be, upwards of 67, 70 cents. Now, those are loose guidelines, but falling right in the middle of there, about 30 cents on the dollar for each dollar of risk gets us to 60 cents. In this case, that presents the opportunity to make $60 in max potential theoretical profit expiring at the end of the week. So how would that happen? Well, you stay above 108. Those options expire worthless. You keep that credit received. Like any trade, there's going to be a situation where there is risk involved. The risk involved in this particular case, it'd be a move lower. It breaks that support level we talked about around 109 and heads below 106. Now, the good news, it does have a theoretical max loss, in this case, $140. You find that by taking the $2 wide spread, you net out that credit received, and you're left with $1.40, which, of course, in options world, we know we got to take that by times by 100. That leaves us with a max theoretical loss of $140. Break even, simply subtract that credit received from the short strike. In this case, that leaves us with 107.40. So a strategy neutral to bullish in construction, going with the trend, hoping that those earnings, even if they do cause a little bit of downside, those support levels hold. Moving on now to peer within the semiconductor world, Texas Instruments also scheduled to release earnings on the 22nd of October after the market close. A more industrial and cyclical company as its semiconductors oftentimes used within those industries. What we looked at here was a stock that had a very different looking chart. One that, although over time had done okay, when you look at the performance over the last, let's call it 12 months, we're still talking about a 32% positive return. But going back over the last quarter, the last 3 months of trading, what you actually see is a stock that is lower over that time frame. So starting to show signs of weakness. If you're going with that more shorter term, medium term trend, and you're saying, hey, perhaps there's more downside in store for this stock around these earnings, we looked at a more bearish centric strategy with TXN. What we looked at here with those earnings again tomorrow, Tuesday after the close, we're looking at a put calendar spread. Now, strike selection is going to be paramount with any calendar spread because you'll see on that risk profile, that's where the apex of profitability is. In this case, we're selling this Friday, which in this case is the October 25th expiration. And what we're doing for this example trade is buying next Friday, the November 1st expiration. The reason the 180 strike was selected, well, that was a recent low that was made back on August 5th, right around $180 a share. So someone who is looking at that chart, trying to, decipher where a support level might be, might look to recent price action to garner that. So in this case, looking at that former low around 180, saying that's potentially an area, if there is further downside, perhaps the catalyst for that being this earnings announcement, you get that test of 180. If you're following along and that's something that maybe resonates with you, the put calendar spread in this case, one that could benefit from that taking place. But most importantly with these strategies, you'll see a very relatively small notional exposure. So in this case, although we're looking at a stock that trades at $195 a share, it's only a 65-cent debit. So it's sort of that aim small, miss small approach with the strategy. $65 is the theoretical max loss, but there's always a catch. The catch is you'll need something to happen. So we're in the Seagate trade. It was neutral to bullish, stay above a level, profitable in several scenarios. In this case, you would likely need a downwards move and a test of those of that strike level around 180 for this to be profitable. Thanks for tuning in. That'll do it for today's edition of Daily Trader. Make sure to check it out every single day.